Hello, traders. FX Pip Collector here. Today is Tuesday, February 4th, and this is my morning video where we take a look at the US dollar index and the other US dollar pairs, including gold, and we take a look at a couple of the JPY pairs. If you haven't done so already, definitely check out my free Discord trading community. It is 100% free to join. The link for that is at the end of this video down here in the corner and in the description. If you would like to join my membership program, then it is only $30 a month to give you access to all the benefits listed down here below and more at my website, fxpipcollector.com. So anyways, first thing first is I always like to take a look at the news calendar real quick. Today is a little bit of a slower news today. It is non-farm payroll week this week, which is on Friday, but today we have job openings for the US, which is kind of a pretty big deal. And then later on this evening, we got some Kiwi news. We got unemployment change and unemployment rate. So as far as the US dollar pairs, I'll be paying attention to the charts around this time for sure. And if you are available for the Kiwi news, then that potentially could be a pretty decent news event also. So just like I said, I just like to be aware of what the news is, and I like to be aware of what time it is. I'm not really necessarily trading the news. I just want to be aware of when it is and what it is. So looking at the US dollar index, let's zoom out a little bit on the daily. I definitely am still looking at this as either a regular flat or an expanding flat wave C. And this right here is the wave A. So this is one, two, three waves up A, one, two, three waves down B, and then five waves up C. So this is an A. This is all an A, B, C of B. I think it's either a running flat or an expanding flat wave B. Now we don't really have a whole lot of proof that this thing is over, and I still think it would make more sense for this to go up and make like a double top like that 3, 4, 5 shape that you see at the end of basically every trend before we actually do get the big push down and potentially the big trend reversal that we've all been waiting for. So unfortunately, there's really no signs that we are going down in any significant way. We did have a big push to the downside yesterday, but was that just the market trying to fill the big gaps on the US dollar pairs? Or was that really like a wave A and a wave B? Now, if this really was a wave B, I would kind of expect it to make an engulfing move to the downside, which it didn't do. So I'm still pretty bullish on the dollar. I mean, it really hasn't given me much proof at all besides this break of structure, which is a pretty much instantly rejected structure, which is usually a pretty bullish sign if it rejects structure in an uptrend. So anyways, we'll take it one step at a time. Let's look at the Euro dollar. Euro dollar definitely did make a pretty significant little pullback. It did fill most of the gap. The problem I'm having is that we don't have an engulfing move to the upside. The trend is down on the daily, it's down on the weekly, and it's down on the monthly. We've also not hit the next Fibonacci level, which is the 61.8. So overall, I'm still pretty bearish on the dollar pairs. I mean, it really hasn't given me any proof whatsoever that the trend is now back up. And one thing we have been looking at is that this is possibly 1, 2, 3 of A. This is possible WXY of B, and then this is actually 1, 2, 3, 4, 5 of C, and that potentially this is actually still in a downtrend. The trend is your friend, and when the trend is not proven to be up, you should be looking for shorts at sort of time frames. Now going down to the 1 hour time frame, like I said yesterday, it definitely does have that A, B, C shape for sure. And potentially it could just continue to make higher highs, higher lows. So unless it goes down and breaks structure, if you are a short time frame trader, you could definitely be looking for longs. If it goes down and takes out structure, then I definitely would switch up to shorts very quickly. If this really is a wave A and this really is three waves of B or wave one and this is three waves of two, then it potentially could continue to make high, low, high, low, high, low. And if it continues to make that high, low series, then why not just continue to look for longs? Just be aware that all the higher time frames are in a downtrend. So no matter how much you may think that this needs to go up and make a C or a three, the all the higher time frames are telling you to look for shorts and that the momentum is still down. So let's keep that in mind for sure while we go to the pound dollar. Pound dollar back up to the daily time frame. Now, one thing about the pound dollar is it never even did break structure to the upside. The trend is definitely 100% down on the daily, down on the weekly, down on the monthly. So if you go down to the 1 hour time frame and come up for reasons to look for longs, then you are definitely fighting all the higher time frame momentum, which is down. Now, this literally could just be another ABC correction to the downtrend. So be very, very cautious in assuming that these trends are over. And just like the euro dollar, the pound dollar also made like a little 1, 2, 3. Could be an A, could be a B. This could be like a running correction for a C, and it potentially could just keep going down. So unless it breaks structure or at least makes an engulfing move up to the upside, the momentum is down and the trend is down on these higher time frames. So taking it down to the 1 hour time frame, like I said yesterday, it definitely does have that ABC look to it. Definitely looks like an A. Definitely looks like 3 waves down for a B. Nice Fibonacci retracement bounce. There's a good chance this move up right here is a C. There could be a wave 1, it could be a wave 2, and it could just keep on going up and make a wave 3. And if it is a wave 3, then it will break this structure right here, proving that it's a wave 3 and proving that the higher time frames really have turned. But until we get that break of structure, we don't know that. And this thing could literally make another lower high. And it could just go down and down and down. Every single higher time frame is in a downtrend. The trend is down on every single higher time frame. Moving on to the Aussie dollar all the way up to the daily time frame. Now the Aussie dollar with that big spike that we had definitely does look like a potential 1, 2, 3, 4, 5 now for sure. And if it makes an engulfing move to the upside, then I would probably start looking for longs. And while I'm looking for longs, if it goes up and breaks structure, that's going to confirm to me the whole move down is over. But there's a couple things that would have to happen for me to really believe this move is over. First, I would have to see an engulfing move, which we don't have. Then I would have to see a break of structure, which we don't have. None of these things potentially have to happen. Keep in mind that just because it looks like 5 ways doesn't mean it's over. It could go down much, much more. So the market should tell us when these trends are over, and it definitely hasn't told us that yet. Now, like I said, is this big move up that we're seeing? Is it just the market trying to fill these gaps? Or is it really going up? Now, if it continues to make, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, then yeah, why not continue to look for longs if you are a short time frame trader, which I'm not. But just keep in mind that every single higher time frame is in a downtrend. This at any time could go down, break structure, and just keep on going down. So pay attention to your structure. If it continues the high low series, then why not just continue to look for longs? If it breaks the high low series, it may be telling you that the trend is still down and that the only reason it made such a strong move up was because it was trying to fill the big market gaps that we had this week. So just to keep in mind, the trend is your friend. So moving on, the Kiwi dollar I don't analyze. It is exactly the same as the Aussie dollar. I definitely will trade it, but I don't analyze it. US dollar CAD, boy, there's been a lot of news with the CAD in the US lately, so the dollar CAD has been pretty volatile. And I will for sure admit that the dollar CAD looks like a potential 1, 2, 3, 4, 5. The problem I'm having with every single one of these dollar pairs is that not only do we not have a breaker structure telling me that this uptrend is over, but we don't even have an engulfing move to the downside telling me that this potential move up is over. No engulfing move, no breaker structure tells me that the momentum is still up. Now, looking at this pattern, I mean, I would think that it would go down. I would think that it would break structure and start to move down. But until the market proves that it is going to do that, we have to keep in mind that there is definitely a chance that it keeps going up for sure. So going down to the 1 hour time frame. So on the 1 hour time frame, was this big move down just a gap fill, or is it really going down? If it breaks below this structure, then that's a pretty good sign. And then if it just continues to go down and breaks below this structure, then that's probably going to tell us that the whole uptrend on the much, much higher time frames is complete. A lot of the other CAD pairs, like the Euro CAD and the Aussie CAD and Pound CAD, did also make a big turn. So this is somewhat the CAD that's causing this. So it does seem pretty likely like it could go down and it could break structure. And if it does, I'll be more than happy to start looking for sorts. But until that happens, I just got to keep in mind, and if it doesn't break structure, if it doesn't break this low, but instead it goes up and breaks this high like that, then you definitely need to get back on the long side because the trend could just keep on going up. So moving on to the US dollar Swiss. The US dollar Swiss is actually one of the ones that I think still needs to make another push up also. We never took out the high of wave 4. I think this whole move up right here is either wave A or wave 1. Wave A, wave 1 should take out the previous wave 4, which it has not done yet. I still think there's a pretty good chance this is going to go up and grab liquidity before we get a bigger move to the downside. It might even break above that and start a bigger move up. So going down to the 1 hour time frame is where I got my Fibonacci retracement on this whole move up right here. We got our Fibonacci retracement from here to here. I am assuming that this move down is nothing more than a correction to this move up, unless it goes down and gives me a nice break of structure. I would be paying very, very close attention to my Fibonacci levels. If you get some sort of a Fibonacci bounce, a nice break of structure to the upside, I would go long again. Every single higher time frame, the daily, the weekly, and the monthly are still in a uptrend. The trend is your friend. If the market wants to turn, it will tell us it's going to turn by breaking and holding below structure. It definitely has not done that yet, so I would assume that any counter trend move I see is nothing beyond a correction to the last push up. So anyways, let's move on to gold. Let's head back up to the daily time frame, zoom back in a little bit. Now that gold did break these previous highs, we are back in all-time highs on gold. Now that we broke that high right there, my next target is the 123 Fibonacci extension. To me, it still looks like three waves up. It still looks like a possible wave B. Wave Bs can make new highs. If a wave B does break a previous high, then normally it will go to either to the 123 or the 138. So I'm looking at someplace around maybe the 2890 to 2850 area for potentially the turn down. No engulfing move, no break of structure tells me that you should be looking for longs on shorter time frames. Moving down to the 1 hour time frame, we really don't even have much of a pullback yet to even really justify going long. We definitely did have a little bit of a three-way pullback right there. And if you've been watching my videos, you know that for weeks now I've been telling you to go long at the end of three-way pullbacks. One, two, three ways down and golfing up, go long. One, two, three ways down and golfing up, go long. One, two, three ways down and golfing up, go long. Even this right here, one, two, three ways down and golfing up, go long. One, two, three ways down. So what am I doing right now? I know I'm definitely not going short. I'm definitely not going long either because I need to see a nice three-way pullback in order to go long. My next target is right around the 2850 area. So I would be looking for nothing but longs at the end of three-way pullbacks, at least until the higher time frame tells us otherwise, preferably with at least an engulfing move or a break of structure to the downside, which at this time we still do not have. Whether or not this right here is the end of a crescent or not, I guess we'll have to see. I mean, it kind of looks like it could even end up being an A and a B, and then down for a C, and then up. But I definitely wouldn't recommend trying to go short for the wave C. I would recommend going long at the end of three-way pullbacks, only looking for longs. Moving on to the US dollar yen. Now, the US dollar yen, technically the structure is way up here. So if it breaks this, then I definitely would become bullish again. But I personally think that we might be in a bigger move to the downside. So if this rejects this area, I would definitely be looking for shorts. If it goes up and breaks that area, then you could go back to looking for longs. But right now, I'm personally looking at this as possibly the end of a wave B, and that we're possibly going down for a wave C, which would likely take out all the previous lows on the weekly time frame. So taking it down to the 1 hour time frame. We are kind of drifting up right now, but I personally would be doing nothing but looking for shorts. I'd be looking to go short there. I'd be looking to go short here. I'd be looking to go short here. I would be looking to go short every single time I see a move to the upside. Anytime I saw a rally, I would be assuming that that rally is nothing more than a correction to the last push down. If this move up right here makes a lower high, makes an engulfing move down, then that is likely a correction to this right here, and it likely would just keep going down. So keep an eye out for engulfing moves. Keep an eye out for, three-way pullbacks to go short for the continuation of the downtrend. So looking at the euro yen, Yes, the euro yen is going up pretty strong, but we do not have an engulfing move to the upside. We do not have a break of structure to the upside. I'm not really convinced that it's going up in any big way until we get either of those. I mean, it definitely could go up and do that, and if it does, I'll be happy to start looking for longs. But unless it does that, I would be assuming that this move up is just another correction, just another pullback rally within a bigger downtrend. Because I do think the wave B is likely already over. Going down to the 1 hour time frame, so there was a big gap on the yen pairs yesterday too at the market open, which we've almost filled the gap. I think that the reason why these things are going up so strong is because everybody's just trying to trade the gap fill. I would not be surprised at all once that is complete if it makes another push to the downside. I would definitely recommend looking for shorts at the end of every single three-wave pullback that you see for the continuation of the downtrend, unless the higher time frames tell you otherwise. So let's take a look at the pound yen. Let's head back up to the daily time frame. The pound yen is definitely testing this area, so it is definitely trying to make an engulfing move up. I would not consider that it has done it already, but if it does break above this area and hold, then it probably is telling us that it's going to go up and make that wave C, and that this would be like an A, this would be a B, and then it goes up for a C. But because of correlated yen pairs and because of looking at all yen pairs, I still think there's a possibility that the wave B is over and that this is not going to make an engulfing move and it's going to push down. If I'm wrong about that and it does break up, I'm fine with that because I'll just start looking for logs for the wave C. But until then, I'm looking at any rallies I see on the shorter time frames as nothing more than pullback entries to the higher time frame downtrends. So going down to the 1 hour time frame, yes, it is a pretty strong move to the outside, but it really doesn't prove to me that it's going up in any way. So if I see an engulfing move down, especially if it breaks down, then I would definitely go short again. If you are trading the very short time frames, which I'm not, I don't even really even have the short time frames on my chart, then you could be looking for longs. And if it continues to make high, low, high, low, high, low, high, low, then continue to look for longs. If it does make it engulf and move down, break a structure, then start looking for shorts. The trend is your friend, and the higher time frame technically is still down. But if you are scalping or whatever, if it continues to make high, low, then continue to look for longs. If you're trying to swing trade, then keep an eye out for a break to the downside for more sorting opportunities. So anyways, don't forget to check out my free Discord channel, which is 100% free to join. Link is at the end of this video down here in the corner. Don't forget to check out my website if you'd like to join my membership. And as always, thank you for watching and happy trading.